Good morning, everyone. Before I go on, let me just share a few important points with all of you. First of all, I just want to make sure every one of you know that Beyond Insights is not a licensed financial advisor. We are in the business of education. That means our roles and responsibility is to make sure that you are well equipped to make all the decisions that you need to make in the market. Right? So what's the advantage of you being able to make your own decision instead of giving all your money to financial advisors or investment advisors? What do you think? Right. So of course, we believe that with the empowerment of knowledge, you will be able to get better returns because you have much more control over what you are doing, right? So that's the principle behind that. So anything that we share today are meant for your reference only. It's not meant as a tip for you to enter any positions, all right? So you still need to do your own due diligence. Kathlyn, are you ready for them?
Yes.
All right.
Right. Good morning, everyone. Right. So we have just hold on. Go with your questions. Yeah, we have received close to 43 questions in total. 44 minus the first line is 43 questions. So I will prioritize this, but some of those who submitted question, I guess, is not here, right? Because it's only 30 plus of you right now, as of now. So probably they will be joining later. So we categorize the questions into the different categories, and I will do my best to answer as many as possible. If you have other questions, you can still type on the chat. Like some of it I can answer together with the topics here. But as what we communicate on what this session is about, I'll also be sharing about what happened in the first half of this year, right? And also what's my view on the second half of the year and next year, okay? So that you can build up some confidence. But I would like to highlight, right? We don't worry about the market, on the just the next 6-month cycle, so worried about recession coming. So what we need to do is to prepare ourselves to be able to trade in any market condition, right? So there should not be any fear about recession. So recession, then so what, right? There are opportunities in recession and there are opportunities in bull run, right? So our role here is to equip ourselves to understand the market cycle and to be able to trade no matter what is happening. Okay, then we don't have to worry about it. So it's about focus on building the competency. Right? In the 20 years, you will see a full market cycle. So what does it mean, right? I know there's an exception, like in Malaysia market. People are concerned with. Let me show you. Right, this is the Malaysia market so far, right? Yeah, I'll share with you. This is a 5-year chart. Like so, Malaysia market is coming down a lot. So I'd like to ask you a question: like, how many of you are already trading in the Malaysia market right now? Okay, so let me launch my poll. How many of you are already trading in if you are trading in the US market, there's you can answer multiple times, right? Whether it's a US, Malaysia, others, if you're trading like Hong Kong, Singapore, or China stocks, yeah. And if you're not started, it's fine. Just click not currently trading. So to answer the poll, if you're not able to respond to the poll, then you type on the chat. Okay. Terence, are you able to see my screen on the poll results? Because sometimes it doesn't come up.
Yes,
okay. Right. So we have so we still have more of you that have not responded, right? So there's only 67% here right now. All right. So about 10 of you, US, Malaysia, and others, right? Those of you who trade others, can you type on the chat? Which country stock market are you trading? Or is it crypto or NFT or Forex? Right? Can you type on the chat? Hong Kong market. Okay. Others, SG, right? Vietnam. Oh, welcome. Crypto. Anyone trading currency market? Yeah, if you are trading currency market, then you just type FX. Yeah. Okay, good. So I have some background. So since there are about so we're quite a mixed audience, but I'm not sure what happened to the 30% of you who didn't respond at all. So if you did not trade, just click did not trade. Yeah, I like a lot of interactions when I teach, so I'm not talking to the wall, right? And I build on that energy. Like the more people I can see, right, the more energized, because I know that you're engaging, and rather than you just turn on your laptop and not engaging, right? So because I think it's very, very important. If you really want to learn something, you join the sessions, then you participate fully. Okay, Yeah, so then you're making best use of your time over here. Right, so that's a mixed audience, so I want to make sure that I cover not just for Malaysians, but also international market in a short while. But I know that for those of you who are trading the Malaysian market, like so far, how do you feel? It could be quite discouraging, right? Looking at the market coming down like this, yeah. Like this is the 5-year chart for the Malaysian market. And let's look at the big picture. You may think that this is low. So before you start buying, let's look at the biggest big picture, right? You can see that the low after the US financial crisis is here. It's still a long way to come down, right? Of course, I don't think that it will go all the way this low, but it doesn't mean when it comes to this level, you should buy. Okay, so I have this mantra, don't buy stock. Okay, I hope you can write down some of these key learnings. I have traded for 30 years since 1993, and I started with the Malaysia stock market here. So let me show you when I started trading. Yeah, this is when I start trading the Malaysia stock market. Okay, so around this time, 1993. Okay, you can see that it was a big bull run. Right, then it was very choppy. Then we have the Asian financial crisis here. Right, how many of you have experienced the Asian financial crisis before? Right, Asian financial crisis, which is a big dip here, 79% down. 79% down. I have read all your questions for those of you who have submitted. Right, there was one question related to when the market go down, what should you do? Should you average down, keep buying more? That's a no to me, right? So please write this down. Never, ever, ever, ever average down. Okay, so these are very important lessons, and if you talk to a lot of seasoned investor and trader, they will tell you this is not the right way. Okay, I know there are some guru in the market which teach about averaging down. So first you need to put it in the right context. It's very dangerous if you don't understand the stock market when you average down. Just imagine when it continues to come down, you keep buying more. What is averaging down means? When it continues to come down, you keep buying more, buy more, buy more, buy more to average down your buy price, right? And you may think that when it recover, you'll be doing well, but you will still not make money when the stock comes here. It's not the right way to do. So when the market turns, you just get out, right? You just cut loss and get out. Then wait for the reversal to come back in. Or if you know how to do shorting, you trade down during that period. Okay. So in order to have enough conviction to trade up or down in this market, or whether to know to get back in or not, you need to understand what's affecting this market. Right? I know it could be daunting for beginners, just like how I started when I started trading in the Malaysian market. I did not learn it properly, and that's why I know, it is very important to educate yourself. Otherwise, during smooth market, you may thought that you are a genius. Okay, yeah. But when the stock market reverse, no matter how much money you make, sometimes you will give it all back and potentially even lose more. Okay, so it's very important to understand it so that you know how to handle. You know that this is going to be a big down, and you need to really cut loss instead of it's low right now, let's buy some more. It's low right now, let's buy some more. Right, so it's very important not to do that. You end up losing a lot of money here. And at this time, when we call the broker, right, traditionally you don't trade yourself, right? You call the brokers. It's very hard to get through the line. I've experienced that personally. Okay, and this is actually one of the very major crises in Asia. Anyone have gone through this type of me? Okay, yeah, and that's why I take this after this session, and also when I joined Intel, right, way back in 1997, yeah, around 1997. This is during the Asian financial crisis, is when I started working for Intel, and I get stock options grant for Intel shares. Okay. That's where I need to figure out when do I get in, when do I get out. But during this period, the US stock market was doing well. US stock market did not crash like this. Okay. And because of this down, I realized that I need to equip myself on how to understand the stock market instead of just following my colleague. I started with just following my colleague, okay, understanding what he buy. Of course, I will ask him questions. Then he said, "Oh, this is the reason why he buy this," and I buy together. But even he was at a loss when this happened, because it's a rare case, right? This our Dr. M was blaming it on George Soros, okay, manipulating the currency. So after that, it goes up here, and it doesn't even go back all the way up. So a lot of people, the third lesson, so as I shared this, I hope you write down some of the lessons learned. So some of the mistakes made by a lot of people is they expect that the market can always go back to before the down, and they thought that this will be cheap. So look at this, right? The market did not go back to where it was. Or even when it does that, it may take too long, right? Let's look at from here. right? This is August 1998 when it recovered, all the way to when it go back to the original high is year 2007. How many years is that? 9 years, right? So 9 years just to go back to the square one. Of course, if you have cut loss here and you re-enter here, then yes, you can make good money, but you will have anxiety, right? So over here, you will give it back. If you don't have a proper when to buy, when to sell, right? A proper money management, right? So it's not only what to buy, when to buy, how much to buy, like how many units, right? And when to get, when you need to exit all, okay? And when you can top up positions, then you will not be able to be consistent in the market. Like I'm a very process-oriented person, and it's very, very important for you to be able to repeat the strategy. And that's why it's important to have a proper systematic process, yeah, and to learn it properly. And this is where I have experienced trading the overall market. Then in 1997, when I joined Intel, I started to get interested in the US stock market. And that's where I started to trade US stock market actively. Yeah, I did not leave the Malaysia stock market at that time until when I wanted to become full-time trader, right? This is where, you know, during this period, year 2005, all the way to, this is still Malaysian market, all the way to year 2008 before I resigned from Intel. And fortunately, I was focusing on the US market at that time. Yeah, because one of the reasons is because I want to have a market that I can make money no matter whether the market go up, go down, or even slightly, right? Because I'm going to be quitting my job to become a full-time trader, okay, way back in the mid of 2008. And that's where the market came down, right after I resigned, right? So fortunately, I learned options. And also, even without options, you can short stop in the US market. You can trade up, you can trade down. There's a way to make money sideways. Right? So I don't have to worry about where the market is heading, in the sense that I can make money in up, down, or sideways. I just need to master when should I trade up, when should I trade down, when I can make money on the sideways trend. Right? That should be the focus, building the competency rather than expecting a crystal ball. Oh, you know, is the market going to be good this year? Good means what? Good means you buy. Recession means you stay sideline. No, that should not be the way. Okay, later on I will share more with you. Yeah, so you can see here, after 2009, the market was very bullish. But you see, if you don't have a proper way, you may be over-contented over here, right? You may think that you're a genius. Wow, you make so much money. Yeah, but after that, when the market come back down here, you'll be stuck again. That means it shows that your method may not work in all market conditions. Okay, so it's time to relook at that, right? And right now, you may think that the market is low. Yeah, but is this the only choice, right? So I have this mantra: never buy a stock just because it's cheap, because there must be a reasons why it's cheap, right? The market is accounting for what it's supposed to worth. Okay, example, Apple phone, right, versus Xiaomi, different pricing, right? Yeah, why can Apple sell higher? Apple stocks is high right now, right? Apple stocks is, let me hide the lines first. Right? Apple stock is still going up very high when Malaysia stock market is going down. Let's look at US versus Malaysia market here. When I look at the, if I look at the 5 years return, right? Right? If you have invested in the US stock market, you will have made this much, right? 113%, right? 5 years return. So average is about 20% per year. This is on Nasdaq 100. And let me add the S&P 500, SPY, which represent the overall US market. Right? This one represent the top 500 stocks, yeah, that are listed. Let me selected 500 stocks that represent the US market. Even that is 60%. That's even after a big down here, right? And now it's recovering. Yeah, you can see the tech stocks are recovering much more. QQQ represent the 100 shares selected from the Nasdaq Stock Exchange, yeah, which is primarily tech stocks, although he has some non-tech stocks. So what I have experienced talking to many people is, a lot of Malaysian traders, they are very worried about getting out of Malaysia, right? They're very contented with the Malaysia market. Yes, they're in good times, right? It's okay. But right now, you look at, if you continue to stick to the Malaysian market, you'll be having either negative or mediocre return. Of course, stock pick is also important, right? So some of you could be selectively, you know how to time the market, you can still make money. But why do you want to restrict yourself to just one market? And also, we have a lot of macro factors that are not conducive for Malaysia, right? So those of you who attend the Invest Fair, anyone of us in Invest Fair this year? Yeah, where Rafizi was also sharing his views about Malaysia and US market at that time. Yeah, so Malaysia has some of the major macro factors that is affecting the performance, right? One of it is currency. Right? Some of you are worried about the US dollar weakening, right? They call it the de-dollarization. That means less usage of US dollar. But let's look at US dollar versus ringgit. You should be more worried about ringgit weakness rather than US weakness. Yeah, US dollar has been strong against the ringgit. Okay, so let me come this. Right, you can see here from 4.8, right? $1 to 4.8, it drops to 4.25, and now it's going back up, and it's on the way to 4.75. Okay, and if you look at the historically, right, it's almost back to during the Asian financial crisis, right? This is where just now I show you the chart of the KLCI during the Asian financial crisis, right? It's actually a currency and stock market crisis at that time. So our ringgit actually from 2.5, just imagine it was 2.55 that time, went all the way, shot up to 4.8 within a very short time, And now we are almost back to that level. And so our Tun Dr. M at that time intervened and pegged the ringgit so that it doesn't fluctuate too much. Okay, so they have to stabilize the ringgit so that our companies in Malaysia who are dealing with a lot of import-export, right, will not be impacted so much. So it was pegged for many, many years. You can see here, 1998, right, 1998, all the way until year 2006, 8 years before it go back to the normal flow, right? When they are confident that the ringgit is severely undervalued, right, then only it goes to market flow, right? So is there a risk where our government will do that again? Yeah, I would say that if it goes above 4.8, they may have no choice but to intervene again, right? Even though they say they will not be pegging, but they may be forced to do so, right? Or unless they use other methods. Because why is the ringgit still so weak? What do you think? I'd like you to participate. Why do you think is the ringgit so weak? Yeah, part of it is because of political stability, right? We have been switching government too often in the past couple of years, and now we have state election coming, right? So who knows, what will happen in the state election, and that may cause some instability in the current ruling government. Okay, that's one of it. The other part is the global weakness as well, right? Causing a weakness in Malaysia. The other part is about relative economic performance. So when you want to invest or trade and get the best return, first you need to think like a fund manager, global fund manager, right? What would make a global funds to come to Malaysia? Malaysia's stock market will not move so much just based on local retail investor. It's too small to move the market. Okay, a lot of the reasons why our ringgit dropped a lot is also foreign funds pulling out. Okay, like over here, like year 2014, there was a few problems, right? One is 1MDB issues. The other one is US dollar tightening, right? They were reducing the money supply and increasing interest rate. Okay, so that's how the macro work. Yeah, so when they increase interest rate faster than other countries, then US dollar will strengthen significantly, and that's what happened last year. Right, last year US is the most aggressive in raising interest rate. That's why US dollar increases so much last year. Right, this is the year 2002 all the way here. Right, because of aggressive interest rate hike, and now US. When we compare all the big countries like US, Europe, UK. And also compared to even China and Malaysia, Singapore, US is raising the interest rate the fastest last year. And this is causing the relative differential in interest rate, which caused US dollar to go up. Understand? Yeah. And this is not something that Malaysia government standalone can solve, right? So how can you solve this differential of interest rate? We can raise the interest rate. But what do you think is the impact if Malaysia also raise interest rate, right? I like to educate at the same time. I don't like to spoon feed. The way I teach our students is get them to think so that they can react to the changing environment, right? The market change, right? Yeah, it will cause inflation, right? If we raise interest rate, and that's the reason why Malaysia was very cautious after a long time, raised 0.25%. Okay, yeah. So if we raise 0.25, but US already raised 5.25, what do you expect to happen to ringgit? Okay, yeah. So that's one of the reasons. So if you have how to think like a fund manager, if you have a certain amount of funds, where would you put your money in Malaysia? Right? Just think about the simplest form, which is a fixed deposit return. Right? If I were to put a fixed deposit, how would you decide? You would choose low interest rate or high interest rate first. Yeah, high or low. I'd like you to type on the chat. This be more interactive. Yes, high interest rate because you want higher return. And also, you should not decide just based on high interest rate, because this is on foreign currency investment as well, right? Don't invest in foreign currency when the bank tell you it's high interest rate, because you could lose, you can make money from the interest rate, but you lose money from currency devaluation. Yeah, example, let's say you invest in Aussie dollar, okay? You may get a higher interest rate, for example, but then when Aussie dollar goes down again, ringgit, you lose more from that. Okay, so what we want is high interest rate and the strengthening of that currency. Okay, yeah. So this is where when you understand the differential of the interest rate, US dollar continued to strengthen last year and even recently, right, against the ringgit because of differential interest rate, and also because the US dollar is strengthening against the global currency. Right? Yeah. So there's a lot of concern about US dollar devaluation. I would say that you don't have to be concerned about that for the next 20 years. We have a very technical study on that. But a lot of the news in the market will scare you. Why? Sometimes it's the people in the market watch CNBC, those news sites, right? Their role is to create, their role is to write something like that attract attention. Like social media, they want to attract attention so that you will click on it. Right. So, and a lot of it is opinion. Right, their opinion. Some of the site want to encourage you to buy Bitcoin, right? So they create a sensation in US dollar so that you will buy Bitcoin, thinking that Bitcoin can retain the value better, or they want you to buy gold or silver, right? A lot of times they have a side agenda, and later I will share with you why. How many of you are concerned with the US dollar devaluation, so that I know whether I should focus more time here or not? Yeah, just type me if you are concerned, so I can prioritize because I have a lot of questions to answer. Yeah, how many of you are concerned with US dollar devaluing? Okay, good. So I will respond to that, quite a number of you. Yeah, so let's look at the ringgit outlook first, right? So you can see that it's still on the climb. How do we look at the US dollar strength? We don't look at just US dollar versus ringgit. Yeah, we look at the what we call DXY. DXY is called US dollar index, is measuring US dollar against a basket of 6 major currency. Yeah, 6 major currency, which include the euro, pound, Swiss franc, Japanese yen, and so on, right? So when you look at the big picture in a 5-year chart, right, you can see that last year, right, beginning around middle of 2021, US dollar has been strengthening against the basket of 6 currency, not just about ringgit, okay, 6 currency, because they were in a tightening cycle, right? So I may mention some jargon here. If you're not familiar, right, feel free to type on the chat, because I know there's a mix of beginners or advanced students. Advanced traders here. So this is the time where the US is tightening, means raising interest rate and reducing money supply. Up to a point in time, they are closer to what they need to do, and they slow down the interest rate hike. Right. So for example, in June this year, they paused, they do not raise at all. But in July, there's an 80% chance of them to raise interest rate again. Okay. So whether US dollar will continue to strengthen is not something I can tell you with precision right now, because even the Federal Reserve, which is the central bank of US, doesn't know for sure at which month they will raise the interest rate, because they are looking at inflation data. Right. So I hope you understand, nobody can predict the market. Even the central bank cannot do that. Okay, but the market will react to what they do, right? What the central bank do, whether they will raise or not, right? And the central bank will look at the inflation data. So the central bank have two major roles. So if you want to understand the stock market in a more proactive manner, this is more advanced subject. This is understanding macro factors, right? The two main things that the central bank need to do. One is control inflation. Right, they call it stabilize prices. This is the US central bank, right? But majority of central bank, they have these two main charter. Stabilize prices means control inflation. Right? Do not want the price of goods and services to fluctuate too much. Why is it so? If they fluctuate too much, it will affect affordability, right? It will affect the import-export. It will be tough for business to manage their estimates, okay, of the cost of goods, right? The raw material, okay, and also when the inflation is too high, it affects affordability, right? Then, so when it affects affordability, because I saw one question, which is how inflation impacts stock market. The way it works is like this. So when inflation goes up, this type here, right? When inflation goes up, means the cost of goods and services goes up, but your pay is the same, right? So what will happen? You can afford more or less now, right? So affordability will go down. So when your affordability go down, you will buy more or buy less. You will buy less. Means it will impact consumer spending, right? So when more people buy less, what will happen to company profits, company revenue? Let's talk about sales first, right? So when people buy less, so there'll be less sales, okay, of revenue. When there's the less revenue, it will be less profit. Stock market is about companies, right? Yeah, so the stock market can only go up if there's a potential for the company to make more money. Like stock market is 6 to 9 months, you may want to write this down. Stock market is 6 to 9 months ahead of the economy. Right, so we don't look at what happened right now to invest. So why is the stock market in the US bullish right now? Because people are anticipating next year economic recovery. So if you think that next year economy is recovering, when do you think is the right time to buy? Next year or this year? What do you think? Next year or this year? It should be this year. Next year will be high already. When it's so obvious, everyone will be in the stock market already. So the big funds understand this cycle. So don't worry so much about end of year recession. When so many people are worried about it and it's all over the news, it's already factored into the stock market already. Okay, it won't be when it happens, wow, it's really go down. No, it doesn't work that way, right? So why I understand this, it took me 30 years, okay? Yeah, in the stock market to understand the overall pattern. I don't expect beginners to understand this, right? That's what differentiates us. We have the big macro approach to the stock market, not just look at a particular stock. So we understand the big wave cycle. Okay, so and I missed many opportunities in the early days when I was just focusing on stock until I understand how the big picture works. Okay? So what is the big picture? If you understand this cycle, then you could be more proactive. Why? Because when the US already plan to tighten, you know there's going to be a slowdown already, right? So last year, when the US is raising interest rate aggressively, US stock market and the global stock market already came down. So what does it mean? Last year is where the market already discounted the recession. Okay, last year, the market already go down to factor the recession. It is not right now to cater for the recession end of the year, because they expect if the Federal Reserve continue to raise interest rate, it will affect the affordability, people will buy less, it will affect the revenue. So the stock market already go down last year. Understand? But you are worrying about it now. It's already happened. And so when they penalize enough, beginning of this year, the market already gone up when they see more signs of the economic recovery. Okay, so that's how the stock market works. Can you understand? All right. So this is where the US dollar moving forward, how will the US dollar direction be, right? It will be depends on the action from the various central bank. Okay, so more likely it's going to be range bound here. Yeah, more likely it's going to be range bound here. And this is likely going to be the support. But even if it goes down, you don't have to be so alarming, right? If it goes down, it's not about the de-dollarization. If it comes down here, it will be more because of the differential interest rate. And when they start to slow down the interest rate hike, or when they cut interest rate, okay, cut interest rate. If they cut more aggressively than other central bank, then it can go down to this level. Okay, but if all the central bank are going down at the same rate, then US dollar may maintain at this level. Okay, yeah, so that's how it works. So even if it comes down, it's just normal. It's just go back to the range, because all central bank, their role is to keep the currency exchange at a certain range, right? This is a comfortable range for the US, right? In fact, a lower exchange rate, for US dollar, if it's weakened, it's actually good for US stock market. That's what I have observed, because when the US dollar is weaker, it will encourage export, right? Because export becomes cheaper. Right now, if you want to buy iPhone from US, is it expensive or cheap? Expensive, right? When it's expensive, people buy less. Okay. So same for Ringgit. Even though the Ringgit is weak right now, there's an advantage here. What do you think is the advantage? The advantage is it makes Malaysian manufacturing cheap. And that's why you see more factories coming back in, right? Yeah, more factories are starting here. Okay. So, but it's not good for the stock market, but it's good for foreign investment. Okay, so we need more foreign investment to come in so that Malaysians can afford more. Malaysians have higher paying jobs, let's say, right? So Malaysians need to have not just jobs or higher paying jobs so that we can afford more, and our economic recovery, right? So we need economy to recover, which means we need more jobs here, more quality companies, then only our economy can recover, then only the stock market can have, then only can attract foreign funds to come back to the Malaysian stock market, okay? And we need political stability. So do you foresee that happening in the short term, right? Yeah, if you're still hanging on to the Malaysian market, I'm not saying that you don't trade Malaysian market, but you need to look beyond just Malaysia, right? There will be a point in time Malaysian market will have its own recovery. But right now, if you're wearing a global fund manager hat, there's so many markets you can invest. What will make you come to Malaysia, right? Yeah, so you need to wear a global hat, right? The way I learn to anticipate better is I need to know, I learned what the Federal Reserve Charter is, so I can think like them. So the Federal Reserve Charter is control inflation. Second one is maximum employment. So you know, these are the two they care the most. So I will monitor the things that they monitor. So I can anticipate better whether they will raise or not raise. Okay. The second thing is you need to think like a fund manager, right? And fund manager thinks global, not just looking at Malaysia alone, right? So there are the US stock market that are performing so well, right? This is the QQQ, right? Strong economy, right? Low unemployment rate, right? So after a big correction last year, stock become cheap in the US. Okay, you can see it has been going up a lot. Like this is the pandemic. It has been going up so much. And last year there's a correction, right? So don't be fearful about correction. Right? So fear comes from not understanding what you're doing. But if you understand why it happened like that, then you can take advantage of it, right? Because this one is based on a lot of, this is a pandemic down, okay, pandemic down. And this is where the US and European Central Bank, UK Central Bank, all printed a lot of money, including Japan and Swiss National Bank. They printed a lot of money here. Okay, printed means pump in more money to the stock market. And this is more than $26 trillion printed. How can a stock market doesn't go up? Like this is the highest conviction trade if you understand what's happening. Okay. And why does the market come down here? Because they switch from printing money to contracting money. They switch from lowering interest rate to increase interest rate. Like that's why the market come back down. So, and why can this go up right now is because here it's also because of the China lockdown, right? There's very high inflation here during this period, very high inflation. Right? And also because of what? Russian war, right? It's Russia war, Russian-Ukraine. It's also the because of this 26 trillion, like still in the market. And also there's a supply chain constraint. There are three factors: supply chain constraint. Because of China lockdown for a few years since the pandemic, right? They want zero COVID policy. So what caused the market to turn around? Because I remember based on what we communicate when we started this session is what happened in the first half of this year, right? Yeah. So over here in December last year is where China removed the lockdown. Okay, so one of the major factors, there are three major contributors to the inflation, right? The Russian-Ukraine war, the $26 trillion, more than $26 trillion stimulus that was pumped in during the COVID to recover the global economy. Out of these three, this one is easing, right? So when a lot of the bad news already factor into the stock market and there's no worse news than that, that's where the market bottom, right? That's from my management experience. This is what I have witnessed over and over again. But during this time, a lot of beginners or even experienced people will not dare to go in. Why? Because they keep looking at the news talking about recession and so on. So, but when you understand all this already factor into the stock price, that's why it comes down. There will be a point in time where the stock price would have already been cheap enough to cater for all this. So when any of this element change, improve, that's where the stock market can recover. Because it's already a lot of pessimism already factored in. So people want to see hope, right? When would it be better than that? Okay, so any of these things reverse. And because of high inflation, right, the Federal Reserve raised interest rate. Okay, raised interest rate. So, and now we are looking at the interest rate hike will still continue this year, but next year there'll be a reduction. Right? And because of the reduction, it can also support the economic recovery. Because once the Federal Reserve are more confident that the inflation is in control, then they will relax. Okay, they won't tighten so much. Okay, and Russian-Ukraine war, who knows when it will end? But whatever is happening in the Russia and Ukraine already factor into the stock market. Why do I say so? You look at the crude oil price, right? The war has not ended, but the crude oil already coming down. because the crude oil is factoring a lower consumer spending already. Okay? So, and because of the China opening up, the factories can start to go back to the normal production. Yeah? In fact, there's a lot of unemployment in China. Okay? Because a lot of factories moved out due to the lockdown. So they have no choice, right? This actually forced China to open up. And when China opened up, you know, China contributes a lot to the global tourism market. Okay, so whether it's inbound or outbound, it will still create economic activity. Okay? So that's where we know that the market can recover. Okay, that's the reason why. So in December, I already have the market update to our students to share with them on this, right? So the travel recovery and also the overall market recovery. But what happened over here? There's a minor dip here. It's because of the banking issues here. So there was some bank failures. One of the reasons for the bank failures is because if you have listened to our market update, you'll probably have understand it better. I won't spend a lot of time here. There's quite a complex issue there. It's because from when you go from low interest rate, this is low interest rate, right? When you go from low interest rate, right, to high interest rate here, it will create a bond market issue. Those companies that hold a lot of bonds during the low interest rate environment, right? Those bonds, this is an advanced subject. If you are new, you don't have to understand it. So I just give you some high level. When interest rate goes up, if you are buying bond, some of you may be buying bond fund. Anyone here bought bond fund before, type on me. Bond fund, unit trust fund. Okay, when interest rate goes up, bond price come down. So it's back to invest in bond when the interest rate is going up. Okay, so because a lot of the companies, they bought it during the low interest rate. So now they get into trouble. Their bond price has gone down so low. If they don't have to sell, it's fine. But when they're forced to sell, let's say they don't have enough cash flow, then they want to sell, then their value will drop. And that's why it's risky to invest in banks. And this is not only for US bank, it's global bank. Okay? You don't know which bank has which other banks bond. Yeah. So that's why it's risky to go into bank stock. People may think bank is cheap, but you don't know how many of them have a lot of bond that was purchased during the low interest rate, and now because of high interest rate, their bond value actually drops significantly. Understand? Yeah, but this one, if you're not trading bond, then you don't have to be so concerned. I know there's a lot of newbies here. Okay. Okay, so that's one thing. A supply chain constraint is already reducing. In fact, now the supply is actually a lot. Okay. The second one is they are removing this 26 trillion gradually from the market. Okay, and so this part is not in favor when they reduce, but they are reducing very little. Right, so supply chain relief will help the inflation to tone down, and the Russian-Ukraine war already factored in. Okay, yeah. So because of that, the market can recover, and also because of when China increase back the activity, although it's still very slow recovery. China has a very, very slow recovery right now, but at least it's from the worst to slowly recovering. Understand? And the government wanted to have more stimulus. Yeah, but the stimulus may not work very well, so it's still going to be slow recovery for China, right? So don't think about, oh, let me invest in China stock right now. Don't go there, because to me, the China has a very deep systemic problem. It's not a small problem for the country to solve. Okay, so does it help so far? Understanding this? Yeah. So why US can have a more sustainable recovery is because US has the most fundamentally strong companies to choose from. Okay, so you think about where you want to invest as a fund manager. You will choose for strong economy. Make sense? Strong economy. You will choose those that has a what do you call it? Traditionally, right? You know there's a good track record for the stock market. Okay. So how do you find good track records for stock market? You want the country that has the most successful globally run company, right? Which country has the most globally run company that are very successful? Which country? Don't know. Because Malaysia has a lot. Malaysia has a few, but not enough. Okay, so that's very, if the global funds come in, they have a little choice or a lot of choice. Right? Just now, I'd like you to wear a hat as a fund manager. Right? You will choose the country that has the most choice for you, right? Steady economy, low unemployment rate, right? Manageable exchange rate. Okay. And this is US is the US dollar reserve. I will talk about it in a short while. They will protect the US dollar no matter what. Okay. If it's shaky, they will go into a war. Okay, they will do whatever it takes to protect the US dollar. And it's not easy to dethrone the US dollar. And what else? You also want to see who can who is the largest consumer in the world, right? US is currently the largest consumer in the world, right? That where people are still willing to spend money, right? Based on this, would you come to Malaysia? After US, which country would it be? Right, so let me show you the global stock market performance, right? 5 years performance, and I will share you. So NASDAQ, like the top part, this is 5 years return. 5 years return, one line represents each of the market. Let me make this bigger. Okay, it's quite too big. 5 year performance, right? NASDAQ, which is the US primary growth stocks, right, is 109 return, 109. Past 5 years, 20% return per year. And ET100 is the European top 100 stocks selected to represent Europe market, right? Europe is still doing well despite the war. You can see, don't just listen to a rumor, the chart don't lie, right? S&P 500, right, is also 60%, so it's 12% per year, right? These are the stocks that cover all the different sectors. Then 001 here is the ticker symbol for Shanghai Composite Index, 11% over the 5 years, right? UK 100, UK is negative, Malaysia minus 17, Hang Seng Index even worse, minus 34%, right? That's 5 years. And if I look at year to date, US is the best performer. Okay, US is the best performer, followed by Europe, followed by, this is US, S&P 500, then Shanghai is only a mere 2% this year, right? And Malaysia is the worst performer of the region. So if I go to, normally I look at the 10 years track record as well, right? So that you know, okay, which market is worth for you to invest. Okay, so I'm going to look at the 2013. Yeah, at exactly 10 years. So I will need to look at June 2013, right? June, somewhere in the middle here. Let me put my mouse here. Yeah, this is 8 July, slightly inside here. Okay, around 10 years right now. You can see if you have invested in the US tech stock, it's about 404% over 10 years, 40% return per year. Right. So do you think it will make a huge difference for you to trade in the US stock market versus other stock market? Yes or no? Do you think there will be a significant difference in your return investing in or trading in the US stock market versus other stock market? Yeah. Right. So don't you think it's worth to understand the US stock market, right? And trade the most liquid market in the world. Okay. And what if I add, just gonna add Apple, right? You can see if you learn how to choose the right stock, right? So Apple is just one of the performer, right? There are many stocks that we have in our watch list. This is 10 years performance of Apple. It's 1,142, 100% per year. Of course, not all years is performing. So you also need to learn how to get in and how to get out, right? 112. So if you look at Microsoft, right, it's 841. If you look at Amazon, right, look at Tesla. Okay, Tesla is high performance, but it's also very volatile. Okay? So this is why it's important because US has very good companies that are well run. Right? So don't look at the stock market as something so fearful, right? What you need to do is understand why US or other countries' stock market is good, what is driving it, and select the right stocks, strong fundamental stocks, right? So when there's a market down, it's an advantage for you because then you can go in at the right price, right? When the stock market comes down this much, like comes down this much last year, right? You can see there's a way to time it. So depends on whether you're short-term or long-term, it will be different. So let me just hide my drawings first. Yeah. Okay. You can see Apple was so bullish. Just imagine, right? You have learned how to learn about what I mentioned just now, right? How to trade the US stock market and have the confidence. You will not be fearful over here because you know what is driving it. Okay, because China market reopening, right? So it helps the overall travel industry around the world. Okay, and also the people in China start to have jobs. Okay, because a lot of US companies are also selling to China. So that's where it recovered a lot. And why it recovers so well? Because these are strong fundamental stocks. The big funds will stand by, research all the strong stocks, and take advantage of the economic down that penalize the stock price to buy. And when there's more certainty on, those three factors that I mentioned is reversing, that's where the conviction come in. Because during last year, a lot of the big funds sell off. There's so much money in the sideline, just waiting to get back in at the low price. And when is the low price? Late end of last year. Understand? Yeah. So, but what happened, right? So the question I have for you, what has been holding you back from investing so far? Like, so that I can help you. Because you have missed a big opportunity. Of course, like there is market cycle. Like, so if you prepare for yourself right now, you can still catch the next cycle, right? And you can make money on the both up and down. But what has been your main hesitation to trade the stock market or to trade the US market? What has been holding you back? So at least I see where I can help you with that to build your confidence. Yeah, just type on the chat. Don't know where to begin. Yeah, okay, that makes sense. So there is a systematic approach, and that's where we come in, right? To guide you, because the stock market is a very complex subject, okay? If you don't know how to approach it. However, we have actually break it down to a systematic approach and divide by whether you're the beginners, intermediate, or advanced level, right? So you don't have to understand everything in order to trade. Okay? So that's a systematic approach. And I explained in the layman term in our workshop, okay? Yeah. All right, so that's the first part. And let me address the concern on US dollar first, right? So that you don't end up overly affected by that and don't dare to invest as well. I have a market update that we do on a quarterly basis to our students, and this is one of our analysts. Okay, this is my last market update, but this is a 3-hour market update, so I won't be able to cover everything here. I just take some snippet where the last round I talk about the updates on the latest events and factors affecting the stock market, addressing the dollar concern, and how to prepare for remaining year, right? 3-hour session. Okay, so I will just pick the major ones to talk about the major events. I will go a bit fast, yeah, because otherwise it will take 3 hours. The Nasdaq 100 and S&P 500 has broken the 1-year high, okay, which means bullish. And the Federal Reserve in the US paused the rate hike. Pausing is good, right? Because if they continue to raise interest rate, it will affect the affordability. European Central Bank increased interest rate recently, and also the UK raised 0.5%. Okay, and the potential stimulus from China, they have already announced that they are on track for 4.5% GDP growth, although there's still a lot of youth unemployment in China. Okay. Inflation, this is the best news so far. Inflation has been trending down, and when inflation is in control, per the central bank expectation, they will slow down the interest rate hike, right? So right now, US already slowed down interest rate hike. That's why they're taking a pause. Okay, but because the inflation is still very high in UK and Europe, so for those two countries, they still have to continue to be more aggressive. Okay. Then the US stock market has recovered, right? Tech stock rally led by semiconductors, software, communications. Why is there a conviction? Like, this is again, like, take time to understand the stock market. So among all the sectors, right, why this has the most conviction? Why tech stocks go up so much? So what caused the market turnaround late last year was because China market reopening, right? One of the supply chain issue removed. And that is one of the areas that is affecting the tech stock last year, right? So I remember I was ordering a laptop a few years back, yeah, during the pandemic time, and it took me 5 months to get my laptop. Okay, I was ordering a high-end laptops for adding to my trading machine, and it was a Intel i9 chip, right? So not enough chip because of China lockdown, and also not enough touchscreen, okay, and some components, right? So I couldn't get it. So even though the company can sell, but there's not enough components, right? And also car, right? Depend on microchip. So, but now, because China has already reopened back the factories, then the supply constraint is removed. Understand? The other reason is because AI, there's a boom after last year, November, where Microsoft introduced a ChatGPT, right? I mean, they were sponsoring, part of the sponsor for the research on AI, and they're integrating this into their product as well, right? So the ChatGPT caused, a lot of interest in AI. Okay, then Google wanted to compete, right? Then Amazon wanted to come in, and we have even the Baidu, right, wanted to compete in this area. So it leads to a demand for semiconductor, software, and communication industry. So there's a lot of factors here. The other part is the US market is, US economy is expected to recover next year. I will show you some data point here. So I'm very data oriented, like, so is actually backed up all by facts. So the positive part about the US Central Bank is interest rate unchanged last round, but we expect them to raise about 80% chance they will raise in July, okay, so that they can speed up to bring the inflation back to 2%. There's a robust job data, right? This is the reason that a lot of people are fearful about recession. Even if there's a recession, it's going to be mild. And this is what the central bank said, okay? Not only what I said. The central bank in US is saying that the probability of a recession in the US is low. And even if it happens, it's going to be a mild one and it can recover fast. Okay, so what do you have to worry? You can take advantage of all this fear in the market, right, to enter into the stock market. Of course, you need to be selective in anticipation of the recovery next year, because if there's a mild recession, it will recover faster. One of the reasons for the mild recession is because US right now has the lowest unemployment rate, okay, in the last, even if we account for before COVID happened and before the US financial crisis, now is the lowest unemployment. That shows that people have jobs. When they have jobs, they can afford, okay, they can afford. And the other main reason is, if the economy slows down too much, the Federal Reserve can just reduce interest rate and activate it back again. Okay, so there's something that it took me a while to understand in the past, and that's why I have conviction once I understand this. The central bank, right, can control. There's two things that the central bank need to do. Remember, control inflation, right? They want to inflation. They want to bring it to around 2%. And they want to maximize employment, right? These are two central bank rules. Okay. So the central bank usually use two things, right? Money supply, right? Increase or reduce money in the market to activate the economy. And the other one is they use interest rate, go up or go down. Okay. With these two, what they can control is called demand. When they lower interest rate, people can afford, then they buy more, right? So they can affect demand. Interest rate is the same, right? So interest rate and money supply, when they reduce interest rate, cost of borrowing go down, your car loan, house loan will go down, right? The business loan will go down. So also increase more demand. But what the central bank cannot do is influence supply. And that's why last year, it's hard to bring inflation down because China locked down. China locked down, the Federal Reserve cannot do anything to influence the factory to open in China. Okay, and if there's no supply, the price of goods will still be high. Understand? High demand, low supply. So you need to understand what central bank can do and cannot do. But if it's because of jobs problem, if it's because people don't have enough money, central bank can do it effectively, and that's what they have been doing. I'm confident that the Federal Reserve can act accordingly if there's a recession, right? When there's a recession, slow down too much, they will just reduce interest rate. Okay, simple, very easy to do. Can understand? So this is why I have conviction, right? Don't have to fear about this coming recession, right? What you need to fear only is something that the Federal Reserve cannot control, right? Which is like war, okay, right? The war extended beyond Ukraine, okay? Something like that. Although probably it's, I mean, it's probably lower, okay? Or China locked down again, okay, new virus, but I don't think they will do that. They cannot afford to do that. Yeah, even that then there's a new strain that was, you know, just like the rest of the country, right? How to figure it out. Okay, and this is from the latest June Federal Reserve forecast. You can see here the GDP growth, yeah, is end of the year target is still 1.0, which is positive GDP growth. Yeah, the original one is 0.2. When they were forecasting this on a quarterly one, a quarterly forecast in March this year, March 2023, it was 0.4. In June, they revised up. That means the Federal Reserve are more positive on the outlook for end of the year. Is it good or bad? Good, right? And next year, there's another increase of 1.1. Okay, and the following year is increased. Like, so it's on the way up. Same for Europe. I look at Europe data as well. Same for UK. Okay, yeah. So that's the. So if next year the Federal Reserve also says that it's economic recovery, then the stock market, the best time to enter the stock market is right now. And that's why the stock market already recovered. But it's selective tech stock, right? So usually tech stock go first, then followed by the other sector. Okay. Yeah. So then the negative part is terminal rate increase, right? So there still talks about Federal Reserve did communicate that there could potentially be 2 more rate hikes. Okay. But after they mentioned that, okay, and last week he talked about it again, the stock market did not go down so much, right? Because why? This may seem like a negative news, but because people know economy is recovering next year, right? Even though they increase the terminal rate, that terminal rate means the peak interest rate. Yeah. So before in June, right, it's 5.1. So when they increase the peak rate at 5.6, that means there's another 2 times of 0.5% to go, 0.25. So 1 in July, potentially the next one is September, because they need to bring down inflation to 2%. Okay. But it's okay. We know that they're at the end of the cycle. And once they're done with this interest rate hike, then they can start to reduce it next year. Understand? And once they reduce, the stock market will recover. So stock market usually will go up when there's a reduction in interest rate. But you don't wait until end of the year to buy. Understand? It's too late. Yeah? But of course, you still need to look at the stock chart. All right. So I'm going to skip the rest of the pages first. Yeah, because that will be too detailed. Like this is what I want to cover. US unemployment rate is near all-time low. All-time low, even lower than before the US financial crisis. This is US financial crisis. Look at it, right? COVID-19, it's back to square one before COVID-19, as if no problem happened before. Like, what is the reason? US has a lot of tech jobs. They have a lot of strong fundamental companies, right? So, and they are hiring to prepare for the economic recovery. Right, they are confident to hire right now. Right, if you know economy recovery next year, when will you hire? You will hire this year. Even though there's a lot of tech jobs laid off, one more confidence on why the tech stock recover is because early this year, in anticipation of a slowdown on consumer spending, many of the companies like Microsoft, Google, Amazon, they lay off more than 10,000 people. Right, Meta, Facebook, right, almost 3 rounds of layoff. So they already reduced the spending, right? The fundamental of the company already improved before the recession happened. They already cut costs. So if the revenue goes down, it's okay. They maintain their profit margin. And if the economy recovers, they will gain even more. Understand? So that's why there's a conviction for tech stock. Yeah, can you see a difference by understanding what you're doing? Right, that's where the confidence comes in. Okay, so I will skip the ECB and China market outlook. Okay, so where we are, right, there's a lot of talks about recession. UK is already in recession. Right. UK already in recession over here. And this is China. China about to recover, but it's very slow. Okay, and Europe entered recession, right? So this is US, right? So it's a bit touching here. But even if it goes in, it will recover fast. That's what the Federal Reserve said. And that's what I agree as well. Yeah, I would think that way. The reason is it's within their control to lower back interest rate if they think that the slowdown is too much. Can you understand? Yeah, unless it's a supply problem that affects inflation. Other than that, they can control, yeah, to recover the economy. Okay, so you can see here, global inflation trend. US is in good shape. You can see that it's trending down. Yeah. They are not looking at bringing down to 2%. This is their target, right? Once they reach their target, right, they consider, okay, I've done my job. So they are looking at by 2025, all the central bank, 2025 only bring it down to 2%. Okay, so this year is on track. So we know that, you know, they don't want to have the market overheated. Okay, so they cannot portray too good the news. Okay, yeah, because what if the next few months inflation shot up? To me, it's okay. Right, it will just be an interim volatility, but longer term is still going to be up. Right, so this is the interest rate. You can see US is 5.25. They may go up to another 2% more, right? 5.6. Yeah. So there's another roughly 0.5 to go. Okay, that's their target. Okay, so you can see US, UK. This is from earlier. They just raised another 0.5, right? Which is go up to 5%. So they're very close to US right now. All right, so this is you can see that US interest rate is almost reaching the peak of the US financial crisis. So we don't think they will go higher than that, because I don't think they want a crisis like this. Okay, yeah. So this is what I've shared last time. Okay, so the one I want to cover is one page on the US dollar concern. Okay, because of time, I'll need to go a bit fast on this. About reserve currency. Okay, so what is a reserve currency, right? It's the currency held by central bank and major financial institution, so that they for international transactions. So they hold on this amount to fulfill the international trades. Okay, so that they won't end up suffering big exchange losses if they did not keep some reserve. Okay, that's the purpose of it. The main purpose is to reduce exchange rate risk. Okay, so a large percentage of commodities are priced in the reserve currency, which is now US, right? And because of that, a lot of countries, they have to pay for raw material, so they will keep a lot of US dollar. Okay, so I will skip this. This is all about the background. Okay, so this page is about a summary. There are 11 points on why it should not be a main big issues for the US dollar to lose the reserve currency status. Okay, so first of all is USD is as a share of the global central bank reserve, right? This is original concern, has dropped from 72% to 58%. That's why people are concerned. Okay, and then there are more initiatives like Saudi Arabia, China. There's this thing called BRICS, BRIC. Yeah, Brazil, Russia, India, and China. After that, South Africa came in, which wanted to trade in their own currency. So what people don't understand is, yes, any country can trade in their own currency, but doesn't mean that US dollar will be removed as the reserve currency. Okay? It just reduces the usage for US dollar, that's all. But it doesn't mean it can be removed, because to be a reserve currency, that's a lot of criteria. Okay? Not just who want to use your currency to trade with each other. Okay, so this is the concern that the Brazil have trimmed down some of the US dollar holding. Okay, so who are the contenders, right? Who can replace US dollar? So these are the three that people talk about. One is the renminbi, the other is euro, and another one is BRICS. Okay, which is the new currency that they just started to talk about it beginning of this year, that they may want to consider looking at a BRICS currency. Only early this year they talk about it. Before that, this BRIC is formed to promote international trade between them among these few countries. Right? It was more for that purpose initially. Okay. All right. So let's look at the central bank reserve currency for the last 20 years. You can see the black color is US dollar. Even as of now, a big chunk of it, close to 60%, is still US dollar. And it will take a long time for it to drop. So look at the CNY, which is the red color, okay, maroon color, is still very, very small. Very, very small. Right. The next one is Europe. Right. Europe is also shrinking, right? Euro. Right. So what are the key points? I won't be able to cover all the points in detail, right? So I will cover the one that more layman can understand. Okay. The first one is US is still the largest consumer spender in the world, 3 times larger than China. Okay. If you are the main consumer, right, can you dictate what currency you want to trade in? Let's say you want to sell something to me, right? Because I'm the biggest customer. Okay. Yeah, I spend 3 times more than China. That means Americans buy 3 times more goods than other countries. Okay. So can you dictate what currency you want to use for your trading? Can US dictate to China, okay, I only want to trade with you in US dollar? Can they do that to Canada? Can they do that to Europe? Yeah. So because of this, as long as US is the largest consumer, right, it's not easy for it to lose the reserve currency, because it can dictate what currency I want to trade in. Okay. The second one is a large percent of commodity are priced in US. Okay, so like gold, silver, coffee are priced in US. And one of the reasons is the largest commodity exchange in the world are all transacted in US dollar, and they are controlled by US. Okay, these are the exchange. Yeah, CME, CBOT, COMEX, ICE. Right, this when you want to buy coffee, orange juice, soybean, right, gold, they are all transacted in US dollar, because it has to go through all these major exchange. It is not easy to establish another new exchange in the world. It took a long time to even establish a futures exchange or options exchange or stock exchange. Not easy. takes time. Okay, the economic leadership, US is the world's largest economy, right? 1/4 of the world GDP. Okay, it's a strong economy. In order to be the reserve currency, you need to be a strong economy. Okay, and US has well established. You see, people, because reserve currency is something that the central bank will keep, right? They do not want to keep something that don't have a value. So what, not only central bank, right? Let's say you want to keep your money in the reserve currency. You do not want to let it be idle, because if you put it in an FD, the return is very small. You want to put it in a income producing asset, right? For example, I would rather put my money, let's say I want to maintain in the US dollar. I will prefer to have my money in a income generating asset rather than keep in the bank. So, and US has the biggest and highest liquidity in terms of financial market for global money to want to put their money there. Okay, so if, let's say, just imagine if China renminbi become the reserve currency, right? Can people in the world invest in China stock market, invest in China property market? The answer is no. And there's a lot of state-run enterprise, right? They are not as transparent like the US market, right? The stock market is still not so mature compared to the US, right? So because of that, global funds, like global money, will still prefer to put in a country like US and Europe and UK that has strong financial market for them to invest, strong companies to put their money in. Okay, that will create the need for US dollar, because as long as your country is doing well, money will want to come in, right? And there will be a demand in US dollar, right? US, I mean, how many of you agree that US has the most developed financial market, a lot of choice on what you want to invest in, right? And US is a free float currency, and China doesn't want their currency to be free float, okay? And it doesn't implement currency controls that give people confidence. USD is highly liquid and provides so many ways to hedge. Let's say you are doing import-export. You can hedge your currency fluctuation with US dollar futures, US dollar options, okay? So, and it's highly liquid, a lot of volume there. But if you want to hedge renminbi, very little way to do that, okay? And many countries pack the currency to US. So if US dollar go down, it will affect many countries, right? So people doesn't want that. And US is the most liquid bond market. This is a bit technical, so I don't want to cover this. In order for you to be reserve currency, you also have to have a big bond market. And US is the biggest one. And US debt rating is AAA, right? China only A+, Russia is C or B. And last but not least, in order to protect your reserve currency, you need to have a strong military strength, okay? So this is the realistic world. And US has the top military strength. And do you think US will do whatever it takes to protect the US dollar? Yes or no? Right? It's spent, just relative here, comparison, US spent 877 billion in military versus China 292 and Russia 86 only. The impact for US to lose the reserve currency status is very high. Okay, although it has a big advantage here. It has a big advantage. Right? So it's a low risk to lose it, but and US will do whatever it takes to protect, even if they need to use military. Right? Because traditionally, all reserve currency change resulted in a war. All change resulted in a war. We actually studied the reserve currency. And this is the layman version. There's a more technical version we have done for our macro insight student. We have an advanced course. So you can see this is an hour presentation just on reserve currency history and why we are confident in it. So the conclusion is Tina, there's no alternative. Okay, even Janet Yellen said that. Okay, what's the reason? Part of it is what it takes to be a reserve currency. China cannot fulfill it. BRICS cannot fulfill it. I'm not saying it will never happen. Unlikely in the next 20 years. Okay, yeah. So there are things that we actually share with our students what to monitor. I'm not saying that it's zero risk, but based on all the conditions, it's very tough to do that. Yeah, to establish a new currency, to establish euro took more than 40 years, Euro Union, and to establish a new currency take more than 10 years, and that's they already have a euro. And do you think Russia and India are very good friends? No, Russia and China, right? The Europe are more closer to each other, right? It's easier to establish the trades, right? But Russia is not in good terms with China. Okay, so they want to work together, establish new currency. There's a lot of things that they need to work out the disagreement on that. Who is in control? And they need to establish two banks, right? So for the US dollar to work last time, there's two banks that need to be established, World Bank and the IMF. Right. So the new currency, if there's a BRICS currency, they need to establish something like the World Bank. All right. So I hope this is helping you. Yeah, I'm not able to focus on the chat here. So does it give you more confidence right now? Yeah. So the recently US dollar fluctuation has nothing to do with this. Okay, nothing to do with this concern or the BRICS initiative. Okay, it's more to do with interest rate movement. It's more because of how much that US Federal Reserve hike compared to UK, compared to Europe. Okay, so I will stop this part. Hope that helps a lot on this. Yeah, and the last part I want to cover is more of the forward-looking. Right, let's say QQQ. Right? There's a few questions on. Let me cover some of the key concerns that people have here. Okay, the first part, I'll address a few questions because the time is running out, unless you can stay back. Right, the psychology of trading, how to manage trade systematically by realizing gains and cutting loss. As I mentioned, right, first you need to have a system, right? We have a very systematic framework. We call it the SDS. Systematic, that means there are 4 trading styles. Okay, so if you're an investor, there's a different way to buy and sell, right? So from the stock selection, there are 6,000 plus stock in the US market, 1,000 plus in the Malaysian market. No matter which market you trade, or Singapore or Hong Kong, you need to have a systematic approach on a tops down, how to select the best stocks. And it only takes 5 minutes to screen once you know the criteria, right? So we have 10 criteria we cover in our course on how to select the best stock first. Okay, after that, you come up with a smaller number, like 20 to 30 stocks, then you study which is the best one and industry you can understand, right? So that's the fundamental part. After that, you need to look at the technical chart, when to buy, when to sell. So before you know when to buy, when to sell, you need to know your trading style. Are you an investor, long-term, mid-term trend trader, where you keep a few months, or short-term swing, you just trade from support resistance, or you're intraday? Each one of these have different way to go in and go up, right? It's not that I don't want to answer you, because it's really, you have to decide which style suits you first. Okay, then you need to have a cut loss point. Okay, let the system do it for you. So a lot of people, they are so worried about being wrong. Okay, so one of the next thing I want to share with you is this. Fear comes from not knowing what you are doing, and fear comes from not managing your risk. Right, there's a systematic way to manage your risk. So we have a framework called SVS. Systematic approach, exactly the process of getting in and getting out. Versatile, it can handle all the market conditions. And S, which is safe. We do not risk more than 1% of the capital when you're wrong. Okay, and the most important thing I want you to take away from here is you don't have to be right all the time to make money. Even 40% right in 100 trades, okay, can you make good money already, even if you're 40% right. Because there's no way to be 100% right. I don't have time to go into all the details. There's no way to be 100% right, because who can predict a war? Who can predict the next the recession or the central bank action? You can only anticipate to a certain extent, right? On the day-to-day basis, there are many different events. So we know that you cannot predict exactly. Okay, predict exactly. So there'll be trades that you need to cut loss. Okay, the most important is you keep your losses small. And when you win at least double of your losses. It's called a reward over risk. We already factor into our process. So that even 40% right, you will make good money already. 50% right, you make even more money. 60, 70% right, you make great money already in trading. Right? For the long term, you can achieve 80 to 90% or sometimes 100% success rate. But you should not depend on a system that, you should not always have the expectation that all trades will be right. Okay? So this is where people are affected by the profession. Like stock market doesn't work this way. Okay, you cannot compare to what you have been doing where, you do A, B, C means D will come up. Stock market is not like that. Right? So once you understand the stock market doesn't work this way, and you need to factor in there will be losses, but it is fine. In 100 trades you measure, not emotionally attached to trade by trade basis. Right? Then you will be confident that you will win in big numbers. Okay, so let me show you one of the slides that we have that build the confidence, how you can grow your money systematically. Right? So one is, first you need to do is determine your trading style. that you are preferred. But market change, right? So I will say that when the times come for investing, you do investing, right? Big market dip, valuation is low. Okay. Now for tech stock, it's no longer the low like last year. Okay, but you can still do trading. Like this is like sideways trading, right? Sideways you can do range bound, right? Now you can still do range bound trading, and it will still trend, right? When it start to trend, like early this year, and there's still more trending stocks, second half of this year, you can do trend trading, right? When the market dip on the right-hand side here, you can trade down. Yeah, you can trade down. Okay, or you don't keep positions overnight when there's a lot of announcement. Okay, or you can just stay out for the meantime. So once you do that, you can look at how to compound your money. You can start in the US market with just 2,000 US dollar, based on the broker that I use, interactive brokers. You can use any broker. And now there are brokers in Malaysia that can accept even 500 ringgit. But of course, you want to be able to buy more strong companies, then 500 ringgit is not sufficient. Okay. In the US market, there's no lot concept. You can even buy 1 unit, 2 units, or 3 units. The percentage return is what matters. Okay, so some of the questions that's being asked is about returns, right? So it's very realistic to make about 20 to 25% per year investing in the US stock market. Why? I have already proven to you there are many stocks out there, like over here. I just pick a few examples, right? These are not alien stocks, right? These are a lot of stocks that you already know, right? So I mentioned about this 5 years average performance. Let's look at this. Right, you can see Apple 295%, like in 5 years. Right, these are strong names. Like this is not a stock recommendation, because you need to know whether it's too high for you to get in right now. Okay, yeah, and depend on whether you're an investor or traders, right? Because even if it's high, you can trade it intraday as well. So 218%, right? That's divided by 5 years is 40% return per year. Right, so what I'm showing the chart just now is just a conservative 20 to 25%. But why is it that they can make money? Right, it's because for every dollar investing in Microsoft, they are making more than 20%. So it justifies, there's a fundamental reasons for the stock to move up, right? So let me just show you this. This is what we teach in our class, part of it. Can you see? ROE, return of equity. For every dollar of the capital in Microsoft, they are making 38.5%. It just takes 3 years for them to double the money, right? Double the capital, right? Return of equity means return of whatever shareholder funds is inside the company, right? It's 38.5%. Okay, so it's justified for the stock price to go up 20% per year. In fact, it's justified to go up 30% per year. But you also cannot buy it when it's already factored in the valuation, understand? So what we teach you is how to know whether it's considered too expensive right now. But it's a profitable company, right? That's why it's going up. So let me just show you. So you need to understand, once you understand why it goes up, you don't have a fear, oh, so high, when is it going to crash? Okay. Even if it's here, if it comes down, it's okay. We have a stop loss. Okay. Of course, you want to catch it early in the cycle, right? That's what we teach our students to do. Detect the trend reversal. Okay. Stand by when the market recovers. And as it goes up, you move up your stop loss, right? We move the stop loss up so that even if it turns, you don't have to monitor the stock market. Like some people have a misunderstanding that because we trade US market, we never stick. No, you don't have to monitor the market all the time because you put the stop loss. It just takes you 5 minutes to enter our order with your profit target and stop loss, and then you go to bed. Okay, unless you want to trade intraday, 2-3 hours per day. Right? Look at Apple. Right? Apple, return of equity. For every dollar in the company, they're making 160%. Okay. So we are choosing strong fundamental company that justify the stocks to go up, right? Simple company like Nike, right? Nike went down a lot last year, yeah, mainly because of the supply chain constraint. They are affected by the supply and there's still inventory issues. Now people control spending, but tech stock is okay because tech stock, we expect a renewal cycle next year. Yeah, renewal cycle because people buy a lot of laptops during the pandemic and it takes 3 to 5 years for them to renew laptop. So next year is the 4th year. Right? If it's not next year, will be the following year. So driven by AI demand, PC demand recovery because they need to renew the laptops bought 3 years back, okay, and also smartphone. Right? There's a smartphone renewal cycle which is going to happen next year. Right? So this year is the best time to buy those stocks that are producing that because they have been penalized. But for those discretionary stock like your shoe, okay, and so on, like the Estee Lauder, right? the consumer spending will be lesser and they have a lot of inventory to clear. It may take them 1 to 2 quarters to clear, right? But there will be a time where all those negative news is penalized, they clear the inventory, then it can come back, right? So if you miss the tech cycle, there is still the discretionary spending cycle that will come in later this year, right? So you just catch the next sector, right? I think tech stocks still have more room to run, yeah? So this is why I think, yeah, this is very viable, just investing alone, okay? But if you want to get better returns, you can do swing trading, range bound, right? Range bound, you go in and out in the short term, and trend trading is 30 to 60% per year. And it's the compounding that matters, right? So I just showed 10,000, but if you start with 2,000, it's still fine. It's just, you know, everything here divided by 5, okay? Yeah. So of course, the fastest way to do intraday trading, but you need to start to learn how to walk first before you run. This is running, okay? Yeah. So this is very viable return. Okay, see here from 10,000 to more than 10 times, right? So it's not about get rich quick scheme. It's about get rich systematically, right? So one of the challenges for most people is they're impatient, right? They have a little money, but they want to be millionaire in 1 year. So you don't do it that way. First, your focus should be building the competency first. Competency, right? Follow the process. Know how the stock market works. Follow the step-by-step process, which actually, when you go through our course, is simple. Yeah, because we have, you know, it's not about getting complicated in trading, but you know exactly what to do, right? Then it becomes simple for you. Someone guiding you. You don't have to go and figure out tons of YouTube and figuring out the process yourself, okay? And we already shorten the process for you because we know what is the market cycle, yeah? And we give our student a stopwatch list to start with, yeah? So those of you ask questions about return, feasible return, this is what it is. If you do trend trading, you can get 30 to 60% per year, right? So one example of trend trading is like Microsoft just now, right? This is the Microsoft and Apple, yeah? So look at the 1 year chart, right? So this is when it starts to trend, yeah? This is where it starts to trend, and from here to here, right? If you learn how to detect the turning point, you can see here. Right, let's look at you cannot time until the peak, because you don't know when it's the U-turn, right? So if you were to exit here right now, you already get 29% from beginning of this year, from March, right? March until now is only 3 months. Okay, 3 months you can get 29% return rate, not even 1 year. Okay, and this is one of the stock. Right, let's look at Apple. It's even stronger. Right, the turning point here, which we teach in the class, part of it, this is not the only one. There's way you can move up stop loss, add position, move up stop loss, add position. That will compound your return, right? Not just this return here, which is 27%. If you do that, you can get 60%. Yeah, that means if you know how to add positions when it's safe. So we teach people how to add positions at those points here safely, because you will have move up stop loss. Your stop loss origin is here. So don't be worried about being wrong. Yeah, because 1 win cover 3 losses in trend trading. In swing trading, 1 win cover 2 losses. Okay, so as you move up your stop loss, you already entered here. If the market U-turn here, you are still in profit. And this is called adding positions safely. What people do is, as they continue to go down, they keep buying. They already lose 1%, after that lose another 2%, then lose 4%, then lose 8%. You should not add when you're wrong. You only add when you're on the right side. Okay, there's a methodology we teach you, so that you add only when it's safe. You already in profit, you protect your previous position, then you add positions. Understand? Yeah. So when you learn this, just imagine the learning curve that is shortened for you, and you can start to trade the right way. How much would it help you in terms of accelerating your return, rather than you still want to figure things out yourself? I'm sure a lot of you already, figured things out yourself, like doing it your own way. So ask yourself one thing, right? Do you have a systematic approach to the market? You know exactly what is systematic approach. You know how to shortlist from all the stocks in the market to a handful. What is your criteria and why? Right, that's number one, systematic. The second one is, how do you know whether it's considered expensive or cheap right now if you're an investor? Then how do you exactly time when to get in, when to get out? Okay, where to buy, where to sell, based on what chart signal, where to put your stop loss, right? Depend on your trading style, how many units you can buy, right? So that when there's a systemic risk, then, okay, when something goes wrong with this stock, you limit your risk. How many concurrent positions you have, so that your portfolio risk is managed. right? So this is called systematic process, right? So when it triggers a stop loss, how do you get back in? What do you need to look to get back in, right? When is the right time to, where the market is too stretched and you should manually get out? Right? This is called systematic approach. So you need to know exactly what to do. Then trading will become very easy for you. Okay, will become easy. Otherwise, you'll be scared with so many things because you don't know what to do and you change every time, right, for different entry, right? The next one is, can your method handle all market conditions, whether it's uptrend, downtrend, sideways, right? Do you have a method to handle all this? And thirdly, do you have a safe money management approach, right? That means maximum risk per trade and portfolio, right? How to diversify within the portfolio, right? So it's called systematic, versatile, and safe. Right. So if you have something like this, right, do you agree that trading can become simple and manageable with low risk? Okay, so this is what you need to have. But you see, a lot of people still wanted to figure it out, right, and want to save the cost of cost fee. I understand that, right? So, you know, when people are concerned, just imagine, right, driving a plane or being a surgeon and you want to save costs, you want to figure out yourself, learning from YouTube. Can you do that? Right? So it's undermining the profession. Just look at your profession itself. How many years of primary, secondary, university course fee that you have paid to get to where you are today? And after that, you still need some experience, right? Don't you think it's a worthwhile investment, right? And this is something that can help you to make your millions, and it's just a few thousand ringgit, right? People are paying. How much money would you be willing to invest for your children's education, university? I'm sure it's way more than 10K, right? Yeah. So this investment itself is considered very small to shorten your learning curve. Imagine you have to figure all this out yourself and you're wasting time, right? So the market doesn't wait for you, right? Missing turning point like this is how much? 27% difference, okay? And this is just one entry a month, that's it. And just imagine missing it for a few years, missing this cycle here. The pandemic time is the best time to make money here, okay? And worst case is make a lot of money, but don't know how to get out, okay? That's the other big problem, right? For example, the top growth that I used to mention, right? This is, right, top growth, make a lot of money, but don't know how to get out, give it all back, and now we're stuck here, right? So this is also another big mistake by a lot of people, where after come down a lot, they don't want to get out anymore. So emotionally tied up with the stock. Right? The best thing to do here, if you're asking me, what should I do with my top growth stock or Harta Lega in Malaysia, the growth stock? First is, if you look at here, the company already losing money. Okay, let me show you one thing. Can you see? They are already negative. Where's the revenue? Can you see negative? Earnings negative. They are already losing money. Do you want to keep a losing money company? That is not one quarter losing, right? Last quarter also losing. All the red color is losing money. Can you see? Lose money. All the red is miss expectation. Right? Fundamentally already weak and cannot compete with China growth. Right? And the stock chart is clearly say that you should get out already. Right? Still below the trend line. So you might as well, no matter how much you have lost or give back to the market, you might as well close this. Do you think it makes more sense for you to close this and find a better stock that has a higher chance to go up? Does it make sense? Right? So you could have, let's say, close this and go and buy Microsoft. The probability for you to make back your money is so much higher compared to keeping to the stock. Like top row is just one of them. Yeah. So you can see that a lot of stocks are still very weak in Malaysia, right? We have a CIMB, right? The turnaround time, this is sideways. So you're looking at this stock versus other stocks in the US stock market. There will be a time where Malaysian market will come back in, okay? But this is not now, and it's not in the short term. Some people cannot let go just because, oh, it gone down so much. They are so worried. This is psychology. So worried that the moment I sell, then only start to take off and you regret. You see, in the market, you have to let go of the term regret. You make your best assessment right now. What is the right thing to do, right? And just let it be. Don't regret on past. You make your best assessment right now. Which one, ask yourself, which one give you a higher probability of going up? Okay, which one? Right. Answer this question, right? US stock market or Malaysia stock market? You have stock A versus stock B. Okay, then you go there. Right? You cannot be 100% right all the time. Like sometimes right after, right? This is the what people will think, right? They get into the regret mode. Yeah, regret mode is like, oh, you see, know that the moment I wanted to get out, somewhere here, so here already cannot control my emotions already. The moment I want to get out, so then start to go back up here. Oh, looks like got hope. Then better get back in, average down, then come back down again. Yeah, because you don't study the fundamentals, right? Is there a chance for what is the reason it comes so low? Remember, it's better to buy a stock high that go higher than low and go lower. Why? The stock that keep going lower means something is not right. The stock that keep going higher means something is going on right. Can you see the reverse psychology? Yeah. All right. So that's the main one I want to cover. It's already behind time. I just want to close on with. First is, do not let your fear stop you. Okay. Do not let your fear stop you. You can overcome the fear by having a systematic process to manage the risk, to know exactly when to get in with high probability of success. Okay. And we are here to guide you, right? You are in good hands. The second one is the need to be right. There's no way to be 100% right. Our model already factored in there'll be some losses, but it's going to be small. In 100 trades, you will make money. Okay, if you follow the process. So there's a systematic way to learn, right? So it's not about just learning how to make money in good market. We teach you how to make money, not just in good market, but also in bad market. Okay. And your goal should be not worry about the next recession, but learning how to deal with all market cycles, okay, with confidence. And there's always an investment for the future, right? What you invest in terms of your money and time today will gain you a long way. So if we have a way to teach you how to make your millions, is it worth it to spend a few thousand? What do you think? Right? And shorten your whole learning curve. I paid a lot of tuition fee to the market and also courses. I attended 11 different courses before when I was learning initially. And that's a lot of money. I think in all my courses, seminar that I attended personally is close to 500,000. Okay, yeah, not just on trading, like some is on personal development, business, marketing, and so on, more than 100,000. And I never regret it because I make more than that back, right? So it's about investing. Just think about it for yourself, right? Sometimes you feel painful. If it's your children, right, you're willing to spend a lot on university. Why not giving them, something that can help them to build a financial future? Because even you finish university, it doesn't guarantee that you can be financially independent, right? This is covered in our free seminar already, right? So attend that one if you are not sure what I mean. Yeah. So, and this is the course that can help you to systematically grow your finances to become financially independent. Okay. And the last thing is, I have made a lot of mistakes in the market, and that's why I can help you, overcome that and reduce those mistakes. Okay. And I understand the market cycle. We have 30, right? Close to 30 coaches that are also investor and trader. Okay, we have the biggest number of coaches in the market. So when you come to our course, you have a lot of support system, not just attending the workshop. You also have the online learning material you can replay. There's a lot of hands-on case study. We look at live charts, live charts like actual stock market chart, and we guide you step by step how to look at it. Okay, there's a lot of guidance. And also we have tutorials step by step how to open the broker account, right? How to fund the account. We have all the guides. Okay, it's very simple to open a US broker account. You just follow the guide. You don't have to go to US and open an account, right? Just from here, you can open an account. You just go to the bank and do a money transfer, wire transfer, and that's it, done. Within a week, you get an account approved already. Okay, there are also new brokers coming up in Malaysia that can trade US market. Yeah, but the offering in terms of the platform is not as comprehensive compared to the US broker. Okay, but there are choices for you as well. Yeah, so when someone guide you, it becomes systematic, right? So opening account and funding account is not a problem. Okay, and there are a lot of secure brokers in the world. Okay, then the next one is learn the process. After that, we have tutorial step by step on how to enter, and then we have a Facebook support group. If you have questions, you can still ask on our Facebook support group. Understand? And alternate week, we have something called a Versatile Traders Club, right? Where our coaches will guide 1 hour a week, okay? 1 hour alternate week on the latest market charts. So you can actually tag along and see how our coaches look at the market. Yeah, and we will guide you to enter into the system, right? With proper trade planning. Alternate week for the next 3 months, you get it to help you ramp up, right, for the next 3 months after the course, so that you build the confidence, yeah, to be independent. All right. So with that, what is still holding you back?